Are you ready to make the most of your oil and gas mineral rights? Welcome to the Mineral Rights Podcast. Get the knowledge and resources you need to manage your minerals and royalties. Here is your host, Matt Sands.
Welcome to the Mineral Rights Podcast. I'm your host, Matt Sands, and I'm joined by my co-host, Justin Williams, and we're here to help you make the most of your minerals and royalties. And in this episode, we're going to be covering mineral rights and energy news for January of 2024. And Justin, I know we say it every year, but I'm going to say it again that I can't believe it's already the new year here.
I'm with you, Matt. It just goes so fast. It's unbelievable. And to know that we're 5 days into January of 24 already, it's just wild.
It is. We're talking about recovering from the holidays. Justin and I were talking before we hit record. Spending time with friends and family is always fun, but I know for me personally, now I'm looking at myself in the mirror and saying, okay, now back to work, try to get back in shape, focus on eating healthy and all the things. So, of course, that's a never-ending battle, especially as you get older. It makes it harder and harder.
Yeah, I'm with you, Matt. Yep. And it's just trying to get everything back to some level of normality after the holidays. But thankfully, we're getting closer and closer. But that said, Matt, things keep going on in the news stories we have today are some pretty interesting stories that kind of cover the gambit of both last year and then kind of what's going on in the political environment for this year.
Yeah, and that's going to be certainly in the headlines for the majority of this year with the election coming up. And I imagine energy will play a big role in terms of one of the main policy issues that is going to get a lot of attention. Related to that, there has been a proposal recently. Do you want to talk about that article?
Yep, absolutely, Matt. So the title here is the SEC delay its decision on natural asset companies. And the article goes on to say the Securities and Exchange Commission on Thursday said it would initiate proceedings on whether to approve or deny a proposal by the New York Stock Exchange to list natural asset companies. The SEC issued the notice 6 days after 32 House Republicans accused the agency of fast-tracking approval of a new type of land management company that would funnel investments into ecosystem services on public and private land and prohibit mining, drilling, logging, industrial agriculture, which, Matt, this could have a pretty profound effect, but it doesn't seem like there's a whole lot of definition yet into exactly what this could be.
Yeah, that's a good point. And the way I look at this natural asset companies, which actually, to be honest, until this article came up, I didn't know very much about. But after reading more about them, it reminds me a lot of the whole ESG movement that started a few years ago that we've talked about in previous episodes. And we'll link to that in the show notes so you can hear our take on that. But those ESG funds in particular that tend to focus on companies that have a green element to their mission, whether that is in terms of their environmental policies, whether they're like carbon neutral or whatever, things like that have been in the news lately. It is hard for me to understand how these companies would make money. And this seems to me like there's something else going on behind the scenes in order for this to make sense. There's got to be some handshake behind closed doors in order for them to buy up land and then to make this a positive investment where they're actually going to be generating revenue. Maybe it's from tax credits. And I think that's probably where a lot of this is going to go in terms of carbon sequestration. So if you're buying up land to prohibit mining, drilling, logging, industrial agriculture, there's probably going to be some legislation proposed, if there isn't already some on the books, that would allow those companies to bank carbon credits and then sell those. So it's all funny money. There's nothing really productive being done in my mind with these companies, these natural asset companies. It's all sort of a shell game where they're just generating revenue through tax credits and things like that is really not adding value in terms of a finished product or something like that. Now, I will say I did look at just briefly because the proposal on the natural asset companies is pretty long. And so I took a look at it. And a couple of things to note and to be aware of is that the New York Stock Exchange owns a share of the company that is proposing this structure. So they have a financial incentive for this to happen because they'll get a share of whatever companies are listed on the New York Stock Exchange. So that's one thing to keep in mind, and why they're pursuing this is because it would be another source of revenue for the New York Stock Exchange. That company itself is just the one that's going to be like certifying these natural asset companies, I believe. And they have like a whole set of guidelines as to what needs to be done in order for a company to qualify as an NAC. And one of those things, like you mentioned, Justin, is that they would have to prohibit mining or any other industrial type activity. So basically keeping the land pure, so to speak. And then I do believe there is the only form of agriculture that would be allowed is maybe regenerative farming. So that'd be small scale farms, not these large corporate agricultural operations, which I'm all in favor of regenerative farming. I think it's great, but interesting to see how this actually progresses if they actually do approve this proposal to list these companies on the New York Stock Exchange. And then the other side of things is there going to be appetite from investors to invest in these types of companies if the return is not going to be just better than other investments? So in my mind, I would think it would be hard to beat investing in a traditional company that's going to have decent profits, and whether or not you're obviously morally opposed to fossil fuels. And that's usually where this ends up becoming the desire to funnel money. If you have your IRA, you have your investments, you don't like the fact that we're still producing fossil fuels. If you're in that camp, then that would be the target market, I would think, for these types of investments. But in my mind, if I'm neutral about that, I think fossil fuels are good. Maybe they're benefiting humanity despite there are some drawbacks. Then, for me to want to invest in a natural asset company would have to just be an outsized return as compared to other investments. And I just don't see how that's going to happen.
You nailed it, Matt. I think this is a really interesting dance that you have to make if you're going down this road to ensure that you don't allow foreign countries to invest in these and to lock up farmlands and public lands and to stop economic activities here in the United States. And that's something that over the last year has been talked about a lot. And this could be another way, if the framework's not built very carefully, that this could be another way for foreign countries to go about it.
That's a great point. Yeah. And we'd be remiss if we didn't mention that. This could open up investment funds controlled by the Saudis, by China, by Russia to buy up huge swaths of farmland and public lands to stop any sort of economic activity. So that's the other thing to think about. It's like kind of a catch-22. They're doing this for like the green side of things, but could they be opening up the door to actually blocking economic activity, hurting our economy, and just because they can? So there's like potentially adversarial countries that we would not want to own a large portion of our land, that this would open up the possibility of that happening. And obviously they need to take that into account. So yeah, lots of question marks in my mind with this whole concept.
You said it, Matt, and as the article mentions, and it's good that the SEC is really scrutinizing this and looking very close, and they didn't just rubber stamp this and move it forward, because that could really not be good. And Matt, next article here that we're going to talk about is mergers and acquisitions, being at the top of the list for 2024 trends in energy. And this article here kind of goes on to mention that the recent mega deals also put pressure on each other to catch the consolidation wave, making conditions right for a new round of tie-ups that could have a profound impact on Texas for years to come. And Matt, it goes on to talk about they expect in the new year, according to a few of the oil and gas leaders, that the wave of consolidations and strategic investments in low carbon solutions, such as carbon capture, hydrogen, and renewable natural gas, among others, will continue in the year ahead, meaning 2024, as creative deal-making, partnerships, and ecosystems emerge. And no surprise, Matt, I think with the price of oil being where it is, consolidations kind of always seem to happen when there's a sustained low price of oil. And it's been interesting to see that.
Yeah, it's interesting. You mentioned the trends, and this was from an Ernst & Young report, and Pat Jelinek, I believe that's how you would pronounce that, who's the America's oil and gas leader at Ernst & Young, or EY now, mentioned three other trends in addition to those additional mergers and acquisitions and consolidations within the oil and gas operators in the United States. And a couple of those key trends are, to your point, Justin, the decarbonization side of things. So decarbonization technology, and the way that to read that within oil and gas is carbon capture and sequestration, emissions management. So that is in terms of fugitive methane emissions. And so that's where companies are going to have more monitoring requirements. And part of that trend is because of the EPA regulations that were passed in 2023 that are going to require operators to get that under control. And then They mentioned using technology to make better and faster decisions, and particularly AI, which is the buzzword lately. And thinking about how technology is deployed in the oil and gas industry, they use it to monitor well performance so they can do some proactive things. So if they see certain trends and they have history, these, machine learning algorithms can look and say, oh, this well is demonstrating these behaviors. Therefore, it's probably going to need this type of a remediation to bring production back up. And so they could potentially start getting into more proactive instead of reactive maintenance and things like that. So there's some interesting opportunities. I do think that application of that technology in the oil and gas industry, particularly on the production side of things in terms of optimizing production, maximizing production, there's a lot of opportunities there as companies start to deploy this type of technology. They have all the SCADA systems, all the telemetry, in other words, at the well site where they are monitoring flow rates, temperatures, pressures already. And so taking that data and then feeding it into an algorithm and having applications that basically monitor that and can optimize it, I think is going to be a big area where we'll see a lot of, maybe not so much in the news, but I'm sure companies are going to be working on that. And the benefit for mineral and royalty owners is hopefully it means more uptime on our wells, higher production, which means better royalty payments. So all of that is really interesting. But yeah, I do think it's going to be a really interesting year. To your point, Justin, with lower prices comes consolidation. It does seem like we're in this trend of where we're in a little bit of an oversupply situation. So prices are probably going to feel some pressure at the beginning of this year. And that could be just enough to incentivize companies to continue to consolidate. There'll be more mergers and acquisitions. So it'd be really interesting to see who's next, as the year progresses.
You said it, Matt. Yep. And I'll be really interested to see how messaging for energy companies change over this year, because it's already starting to become pretty evident. And I can only imagine that as the other companies expand their investment more into decarbonization or carbon sequestration, they're really going to use that as kind of the vocal piece that they're going to promote to the public, which, as they should. The oil and gas companies are certainly getting a bad rap in the last few years. All right, Matt. So our next one here, speaking of ExxonMobil. So ExxonMobil to begin lithium extraction in Arkansas as officials hope for the start of a boom. And Matt, this is really interesting. We talked about lithium being part of what is in the produced water with an oil and gas well. So to see this article where they're really putting effort into making this commercially viable is really eye-opening and interesting.
Yeah, you make a good point there with ExxonMobil being in the headlines. We've talked about the Smackover formation and lithium extraction, but in the past, it's been sort of smaller independent companies which don't frankly have the capital to grow at a large scale. There'd be a lot of small projects here and there. ExxonMobil, on the other hand, obviously one of the largest energy companies in the world, does have the ability to scale this to be a huge thing. And so this is something that I think is an interesting announcement, because they mentioned in this article that they secured 120,000 acres in Columbia and Lafayette counties in Arkansas. And they have 3 drilling permits as of the end of last year. And they're, I guess, have begun drilling already on one of the test wells, the Susie #1 lithium well, which sounds like it's near Magnolia, Arkansas, which I'm not really sure exactly where that is. But in any case, the whole impetus for this, of course, is lithium for electric vehicle batteries. And so as we see the drive to continue to electrify all the vehicles and everything, and with lithium being a key component in manufacturing those batteries, then they need a source of that raw lithium, and hopefully we can do it here in the United States. So it's, I think, encouraging to see companies pursuing these types of projects in the US rather than going abroad to do it. And I think it does present a big opportunity for mineral and royalty owners in East Texas and in South Arkansas, like we've talked about in the past, because this Smackover formation covers a good portion of that area. And there's a ton of lithium in the produced water. So this is an area where they've had produced oil and gas for years, and there had been lithium in that water. And now the lithium is actually the thing that they're going after. So kind of ironic that they're actually going after the water. And you'd made an interesting comment before we hit record, Justin, about like, well, what about reservoir engineers? This is something where they're going to be able to apply their knowledge to the water side? And I would say yes. The good thing about this area is we have a lot of conventional wells that have been drilled, a lot of water that's been produced. They have data on the concentration of lithium in that water. And so they can build models to figure out how much lithium could be extracted from each well to see the economics and all of that. So I do think it is something that is very applicable in this case.
You nailed it, Matt. We talked a little bit too before you record about, case law. Going to be an interesting question if this becomes commercially viable and they really start producing and generating income from this. Who owns the lithium in that water? And Matt, we were kind of talking, and the operator typically takes ownership of that water once it's produced. It'd be interesting to see if, because the sole thing that they're going after is the lithium, if that's going to remain the case. And I'm sure, like we said before, once the money starts talking, there will certainly be lawsuits that will kind of drive this home and the precedent set. But it's an interesting question mark for now.
Yeah, you make a great point there, because on the Texas side of the border, in Texas, they established case law that the operator takes ownership of that produced water once it's pulled out of the ground. And unless your oil and gas lease specifically reserves the right to lithium or any other valuable minerals that could be contained within that brine, then there's a possibility that you're going to lose out on the opportunity to get a royalty from that. And so that's a big question mark in my mind, is what is Arkansas case law? What are the laws on the books in terms of that produced water, and who owns it? And then certainly if you have mineral rights in these areas, it is something where if you're approached to lease your minerals, and this is an area where there is lithium extraction, it's very important to make sure that you word your oil and gas lease such that you reserve the right to that lithium. So it's an important thing to get help from an attorney if you're in that situation, so they can help you word that lease to make sure that you're protected and that you can profit from the lithium extraction. So yeah, really interesting, good opportunity, I think, for folks that own minerals and royalties in Arkansas, and especially, thinking about Arkansas, that really it was pretty dead in terms of oil and gas activity over the past several years. And this is going to kind of be an economic boom, I think, to these areas that otherwise hadn't really had a whole lot going on that side of things. So.
Yeah, very interesting, Matt. And I think it speaks to the future of batteries being part of energy security. And that's something that we've got to be able to mine those resources and produce those. We're going to head down the road of really depending on the batteries.
Yeah, that's a good point. So yeah, we'll be monitoring this one. Hopefully, fingers crossed, it works out and it ends up being a big opportunity for mineral and royalty owners in Arkansas. So.
All right, Matt, rig count. So not a whole lot happening here, which is unsurprising, seeing how it was the holidays. But looks like we gained 2 in the Permian and lost 1 in the Eagle Ford. So pretty interesting. I'm surprised that we're not seeing more units go down with the price of oil being as low as it is. But again, holidays kind of slows things down.
Yeah, the land rigs they increased by 1 overall. Like you mentioned, we're on the land side of things at 602 versus 601 the week prior. And this is as of December 29th of 2023. To your point, Permian Basin continues to get most of the activity. We're seeing rigs move there, 1 down in the Eagle Ford and then up 2 in the Permian. So it's pretty flat, like you mentioned. I think that part of that is because companies probably shuffled things around prior to the end of the year. And so this is sort of the exit rate, as it were, leaving 2023, based on the capital budgets, based on where they were with spending in 2023. Depending on how oil prices shake out in the first quarter of this year, to your point, I agree. I would expect companies to cut their capital budgets if oil continues to fall. Certainly if it goes below $70 a barrel, and then we'll see additional rigs laid down if that happens. But hopefully it does kind of stick where it's at, or maybe go up a little bit, just so we get that stability. This seems to be like a fairly stable, pretty good place to be from a drilling standpoint. So as long as prices stay stable, then I would expect to see continued focus on oil. Like we talked about in the past, you don't see a whole lot of activity, or not as much activity on the gas side of things, just because gas prices are so low. But, again, we got to weather 2024. If you have a lot of gas royalties, stick with it. It should get better in 2025 as the additional liquefied natural gas plants come online in 2025. So hopefully that'll provide a little bit of a boost in gas prices. But yeah, it's interesting to see it pretty flat. I guess no news is good news, right, Justin?
That's right. Could be much worse, that's for sure. And Here's to 2024, and it'll be interesting to see going into an election year, like you mentioned at the start of the show, how much energy is going to play into what the politics look like for this year. And I think it's going to come from several different angles, but I think it's going to be very important.
Yeah, that's a good point. Good way to end. Happy New Year, and we will talk to you in the next episode. Thanks again, Justin.
Thanks, Matt.
Thanks so much for listening to the Mineral Rights Podcast with your host, Matt Sands. Don't forget to subscribe and share at mineralrightspodcast.com. The Mineral Rights Podcast should not be construed as investment, legal, or tax advice. All information is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy.